Yes,
What
Maria.
is that document again? Is it notice of levy?
Levy,
That gets
LEVI?
delivered to the
right? LEVY, right? LEVY,
Okay.
notice of levy, right? That's the phone. This is standard phone. If you check online, you say Google, you say notice of levy is come out. So again, once creditor receive the judgment, there is no guarantee. The whole game just begin. The whole ball game just begins from there. It's not finished.
For the certain garnishment, what do you need to file?
Oh, for the salary, right?
Yeah.
It's called, this is another form. It's called salary or wage garnishment. Notice of garnishment. Again, you deliver to the sheriff office, then they will deliver to the HR or accounting department.
What is spell garnishment?
GARNISH.
MENT.
Right, garnishment.
Now, this is different from the bank account, right?
Yes,
And
it's
we're
different,
talking
right,
about-
right. So I just want to make it clear, okay, because I think at least, from today's lecture, you can take away a few items. Hopefully you are never use it, okay, hopefully. But in case, you really want to collect, you got the judgment, you received the judgment, but the whole ball game just stop from there, okay? You need to search whether or not you want to file the abstract judgment to against potential real estate property, and you file the notice of levy, right, to against the bank account. Of course, you need to spend the money to do the investigate to find out which account, what account number. You need to put on very specifically, otherwise sheriff office will return to you, right? So number 2, you file the notice of levy against specific banking account, and you deliver the notice to the sheriff office. All right, the sheriff office will deliver the notice to the bank. All right, that's number 2. Number 3 is garnishment. Garnishment is to against debtor's wage or salary. So same thing, you filled out the form, is called the notice of garnishment. Okay, again, you do the Google search, the form come out, right? Then you just fill in the name of debtor, the name of the company, where the debtor work for, and the address. And the problem is, for the huge company, you need to find out which address, because like Intel, as far as I know, the Intel headquarters is in Nakara, but the location they pay the payroll is in Los Angeles. It's very complicated, so complicated. You need to find out the right place. Then the local sheriff office will deliver the notice to the right place, and then when the company receives the notice from sheriff office, they will withhold the money, and usually it's 25%. Huge money, 25%. But from that moment on, debtor still can file exemption. So either it's the notice of levy or the notice of garnishment, debtor still can file. I done a lot of that. Okay, file exemption back to the sheriff office. Say, okay, I'm done. I'm doomed. Okay, but my financial situation is so bad. I really need such money to cover my regular standard living, because if you take away my money, I cannot make my living. So still there's one last chance for debtor to file exemption. It's called claim of exemption. So you see, so many procedures just try to protect the debtor. Just one moment. Okay.
Extension or exemption?
Exemption. There is an exemption to protect away from the garnishment. Another form is called exemption, claim exemption for the levy. So for each one, you just match the right form. Then, when the sheriff office receive this claim of exemption, and they will file with the court, and the court will set up the schedule and ask the both party come in to explain to the judge, and the judge make the judgment. Usually, my experience is, for those people who filed exemption for the garnishment, if no exemption file, okay, the company will withdraw 25%. That's huge money. 25% of the gross. However, if debtor explain the situation to the judge usually will reduce like each paycheck say $100. You know, I have a client is I don't know how do they manage their financial situation. Husband, wife, they make more than $300,000 per year, and they still owe money to credit card company. So from the past few years, the experience I learned, I hear, you know, try to share with you. Okay, the matter is not how much money we earn. The matter is how much money we spend, or we obligate to spend. As long as you obligate to pay $1 more than your regular income, you are really in bad situation. So for this couple, I just cannot imagine, you know, double income, high salary engineer in Silicon Valley, very stable income, $300,000 per year, and they owe a lot of money. And right now they are in the garnishment situation, and the case pending right now. The case pending. I wonder. I have a very similar case, but that is a single income. Wife did not work, and the husband is like 250. And I represent that case for exemption, and the judge rule $250 every month. $250 every month, and compared to like say 20,000 per month, 25%. That is how much? That is like $5,000, right? Right. You reduce from $5,000 per month to 250. A lot. Reduce a lot. You can imagine that, because if you don't file the exemption, this 25% is gone. And if you reduce 200 or 100, see what? You know what happened? Because the law only allowed one garnishment at one time. You got the deal? You heard this?
Yeah.
The law only allowed only one garnishment at one time. So if this person owed 20 credit cards and the judge ruled, say $100 every month, that really means you pay $100 for the whole life and you block all of them.
But that isn't combined, right? I mean, we're talking about, no?
Only one. So whoever first come in, receive $100, and more like you buy the whole life insurance. Because for those people in the back cannot come in. So again, you know, the law always on the side of debtor. So this is the worst case already, right? This is the worst, right? You have not, this is the end, right? This is really the end of the game, right? Because the debtor lose everything, right? Lose at the court, lose at the enforcement, lose everything. Even though lose everything, but right now, if the debtor file exemption, the judge say, okay, you lose everything, but you only pay $100 every month. What does that mean? That means you pay $100, you almost like you pay off everything. Because for the whole life, probably you cannot pay off. Because the legal interest rate is 10%. If one person just owe $20,000 principal, 10% that's almost $2,000. If judge allows you to just pay $100 per month, they really mean for the whole year you only pay $1,200, right? Not even cover your interest on this account, let alone the rest, right? So they really mean the legal system allows you to pay the very, very minimum money to protect you, to cover your standard living, and the whole thing is done. So if any other judgment come in, it really becomes just paper. It just becomes paper, nothing. At least for your garnishment. For the garnishment, you know, it's over. And the other creditor, they maybe try their best to find out whether or not you have a real estate or you have a banking account. But for your salary, it's done. The battle is done there. Yes.
But you said one garnishment each year. Then after this year,
Only one time, and that's each year.
Oh.
Only one good garnishment at one time.
Like whole life,
Yes, forever.
even like they still have the stable income.
Yes, yes. Of course, as a creditor, you can always go back to the judge, ask the judge to open the case, reopen the case, to reevaluate, the update financial situation. But the people stand behind and almost has no chance to
Professor,
get involved. So far you understand? So that's the reason why it's a lot easier to defend the debt. Much easier to defend the debt. Yes.
what if the debtor at that time jump to a higher income job? And
Yeah, again, just as I say, as a creditor, you can always ask the judge to reopen the case to evaluate. However, it doesn't matter how much money you can increase, but only one good garnishment at one time. So that is the big as, I would say, this big as protection on the debtor. So after this lecture, you try not to give anybody chance, to owe you money. So you try your best to do not become the creditor. And this is my philosophy, okay? Don't become the creditor, okay? You rather become the debtor. Okay? Don't put yourself in the position of creditor. So if the best friend of you try to borrow the money from you, you know how to say that, right? Right? Because I told you already, so don't become the creditor. You rather become the debtor.
Even you lend money to somebody else, but you try to be the first one, isn't it?
Well, it's
That
very
is
tough.
hard.
It's very hard. Well, let me put this way, okay? If you really want to lend money to your friend, to your family member, you just assume you cannot collect it. You just assume. If they pay you back, you're lucky. If they don't, just say, okay, this is it. This is part of life. Otherwise, you just say no. Okay. So as I say, when you do the business, do your best. Do your best. Okay. Don't get involved the payment term. Okay. If there's a payment term, then try your best to get a financing statement. Any other questions about this? Okay. So enforcement is no fun. Okay. There's no fun. You just waste a lot of time, waste your energy, waste your resource. Don't do it. My recommendation is don't get involved. Yes.
When you file the financing statement, do you need to send a copy to the debtor?
Oh yes. You just send a notice to them. Yes. I believe they agree because they understand this is a payment term, and very common way is as a creditor you file the financing statement.
When do you use the financing statement?
When? If you have routinely ship out the merchandise to your client, to your customer, I would say you file the financing statement on the day you deliver the merchandise. Don't wait. Of course, it's very tedious, right? Because on the day they paid you, you need to release that, right? You need to release the financing statement. But there's no easy life, right? So life by itself is very complicated. So in order to protect your, after I give you the whole picture like this already, you'll say, forget it. I will stay in my home. I don't want to do any business, right? I retire earlier, right? Right? There's a lot of hassle there, right? So don't do it.
If I file the financing statement, but I don't, release it,
No, you must release it. Otherwise, you'll get a penalty.
who's going to penalize me?
The debtor. If you don't release it, they cannot resell the merchandise. Once they pay off, you agree to release it. Otherwise, you make the whole merchandise never be reasonable,
Well,
right?
the end customer, end buyer, they don't know this. They can still.
Oh no! They can sue you, of course, because you make the whole thing immovable. You make the whole transaction immovable in the future. Down the line, just like a vehicle. Think about this. If you sold somebody else the vehicle and you put on the lien on it and the buyer pay off everything, if you don't release with the DMV, the vehicle by itself cannot be resold anymore. Stuck there. So of course they will sue you.
I know, but financing statement does not really automatically put any lien or anything.
No, it is a lien. It is lien. The function of the financial statement, it is a lien against the merchandise. It is. Otherwise, why bother it, right? Financing by
But
itself is a
filing
lien.
against the government, not really the
Everything you file with the government. Different is which level, right? For the real estate, you file with the county level. For the UCC, you file with the state level. So same thing. It's the same philosophy. So remember, okay, when
What I'm saying is that even you file this, the debtor, they can still receive merchandise.
debtor, they
Because
only keep the merchandise, but they
Okay.
cannot resell.
But they can sell it.
No, they cannot
the buyer
resell.
does not know it.
No, it doesn't matter. Come on, I already give you the constructive notice. Come on, a week. I just mentioned there are two different kind of
But
notice,
you
right?
realize that's
Actual
not
notice
100%.
and constructive notice. Once you file it, doesn't matter you have such actual notice. Doesn't matter that become not issue anymore. It is constructive notice. Everybody in this whole world will be presume you know about this. So with the same token, once the buyer pay off, you must release. Otherwise, the merchandise cannot be resold. Yeah. You are talking about actual notice. No, in legal world we say constructive notice. Once the merchandise has been filed, financing statement, we just assume everybody in the whole world know about this. Doesn't matter actually whether or not you know that. So by the same token, if buyer pay off, you must, as a creditor, you must release. So it's very tedious. Okay. Any other questions about this? I want to move on. Yes.
If we sell the merchandise to New York and we are living in California,
Then you file with
so-
New York.
Okay.
Yeah, where the merchandise is, where the merchandise shipped to, you file with the state. So each state, I know it's very complicated. It's very complicated. So far so good, right? Okay, let's talk about a little bit about bankruptcy. Bankruptcy is big issue in the past few years. Right now it's getting better. Okay? Let's talk about two different type bankruptcy. One is individual or say personal. The other one is corporation. All right. So let's have two big categories. So in the past few years, a lot of people, if they owe credit card, they may consider to file personal or individual bankruptcy. And there are two different levels. Chapter 7. Okay, Chapter 7 and Chapter 13. Chapter 7 is called liquidation. Liquidate. That is real bankruptcy. Okay, liquidation means whatever the assets left, I just turn everything to the court and leave out to the court to make the distribution. So for example, this person total assets is only like $1,000. Okay, total assets is $1,000. But this person owe total say $100,000. So this person just turned this $1,000 assets, doesn't matter it's cash or personal property whatsoever, turn it to the court and leave out to the court to make the final distribution. That is called Chapter 7 litigation. Okay, liquidation. However, even under Chapter 7, again, there is exemption. There is exemption. So what kind of exemption? You can keep the minimum clothing, furniture. You can keep one automobile. In some situation, you can even keep one house. So ridiculous. Of course, the value must keep under certain value. Okay, you can keep the tool for your job, like computer, like whatsoever, right? So even under Chapter 7, individuals still can keep certain item as the exemption. And for Chapter 13, that is called payment plan. Payment plan. So you do not file the bankruptcy overall. You only file the bankruptcy on a certain debt. Understand? You see the difference? For Chapter 7, you want to wipe out everything you owe. Right? That is Chapter 7. And of course, the requirement is your total assets must be lower than the total debt, right? For Chapter 13, that is not necessary. You still can keep certain amount of the assets, so probably your total assets exceed larger than your debt. However, you just want to wipe out the certain item of the debt. So that's the Chapter 7. You select which item you want to be wiped out. Then you enter into the payment plan, and if the plan approved by the judge, then you just pay. Usually it's like my experience, there's no golden rule, okay? But usually my experience is 90% off. Good deal. Good deal under Chapter 13. Okay, not only 90% off, also enter into the payment term. So like 18 months, 2 years, 3 years, depends on the amount. So usually after Chapter 13, debtor only pay a couple $100 and to relieve from huge debt. And the good thing is, you still can keep whatsoever you owe. Okay, you only select a certain debt to be wiped. Okay. And with the same token, Chapter 7 corporation. So corporation can also file the Chapter 7. But for the reorganization, there's a Chapter 11. So for the big company, okay, we have the GM, right, filed the bankruptcy a few years ago, right? For this kind of company, they don't file Chapter 7, obviously, right? Because the company is still in operation. Only thing is they don't have enough cash to pay for the debt. So Chapter 11 is called reorganization. And the court still allowed the whole thing running, the whole operation still running. The bad thing is the vendor cannot get paid. The vendor. Doesn't matter what, okay, employee always get paid. Employee, government always get paid, right? But under Chapter 11, the court will approve the payment stop to the vendor. But, the debtor need to find another way to get the materials. All right. So that's the Chapter 11. Yes.
So Chapter 13 is for personal.
Yes.
Chapter 11 is
Yes.
for corporation.
For the high assets, for the high value, very high value, say, I don't know, I don't remember the value. Say more than $10 million individual also file Chapter 11. So individual with a very high value assets also in the category of Chapter 11. But usually individuals Chapter 30. So corporate is Chapter 11. Right. So this is BK. All right. So making sure, okay, the debtor do not file BK, especially in the landlord-tenant case, especially. Okay, if tenant filed Chapter 11, it is biggest headache to the landlord. Number one, you cannot collect the rent. Number two, you cannot file the eviction.
If the tenant what, sir?
File Chapter 11. If tenant filed bankruptcy Chapter 11, it becomes big problem to the landlord. Because if tenant filed Chapter 11, usually, they don't pay the rent, of course, right? And then, again, not only not pay the rent, they stay there for free. If tenant filed bankruptcy, landlord cannot file eviction. You cannot file eviction, they stay there. Because
How can the landlord collect the money owed?
just wait for it. Just wait for the court to approve the payment plan. So they're just sitting there very passively and waiting for it. Of course, they can file the petition. They can try to say whatever they want to the judge, but the final thing is just sitting there and wait.
Is there a way we can at least expedite, we're talking about waiting from the court for the judge?
Yes, so the way to protect the landlord. So right now, if we switch around our position, so if we were the landlord, usually when you, eventually probably we have that topic. If we were the landlord and then the tenant is a corporation, then be careful. Usually, if your tenant is a business organization, doesn't matter it's a corporation, limited liability company, doesn't matter. Usually, landlord will require individual as co-tenant or guarantor. So in case the corporate file bankruptcy, then the landlord can ask the individual to pay for the rent. That is a very common way. It's a very, very common practice. So at least consider it. Okay, at least consider it. All right. We have another totally different area. That's called product liability. So when we talk about creditor, debtor, right? So many different combination. Could be employer, employee, could be whatsoever. One person owe money to the other person. So one situation that is consumer protection, or we say is a product liability. And each state they have such law. And the bad thing for the manufacturer is this is almost unlimited liability. All right. If the product liability issue was filed with the court, and usually, well, this kind of case will go to the jury. And once in a while, we heard about the news, right? Say the judgment against the manufacturer, and there's one very famous one, is BMW. Okay, against the BMW, and usually if the actual damages say is like a couple $1,000s, right? But along with the actual damage, usually come up with penalty. Usually come up with the penalty damages, and usually it's about like 5 times, 10 times bigger than the monetary. So that's big issue. Yes.
You said that's unlimited liability. I'm sure there's limited liability, which covers what, under 25,000.
Okay. When I say unlimited liability, I really mean the jury, they will look at the design and the manufacturing process. So if there's a defect, on the design or the manufacturing process, then the liability will be held against manufacturing and also reseller. So if one case is regarding the automobile, for example, okay, if you check online any product liability against the pharmaceutical, right? Like the medicine, for example, that is part is kind of product liability. Even the product is approved by FDA, there is no defense. There is no defense. Even the food is approved by FDA. The medication is approved by the government agency. There's no guarantee. If the product is being resold through the regular channel, and the final consumer use it and got damaged, the whole channel will be sued. A government will not be sued, by the way, because there's exemption, for the government. They don't have that liability. But from the manufacturer, from the designer, from the reseller channel, so a bunch of the people will be sued. So when I say unlimited liability, is really looking at the design and manufacturing. So we will not spend too much time about this issue, but just be careful. If your business is related to the consumer product, right? We understand. For the product business, maybe your customer is another business. It's called B2B, right? It's called B2B business model. You have less liability. But if you have a B2C model, your customer is end user, you have a much higher product liability, warranty. All right. So we will not spend too much time here, but just be careful. One type of debtor, creditor debtor, that's involved in product liability. All right. how to, let's come back, okay. If you are in the consumer product, okay, how can you limit your liability? If you, doesn't matter, even you provide service, by the way, even you provide a service, your client or your customer is the end user. Really mean they don't resell, okay? They just keep, they just take, they just receive your product, they just consume your product, or they receive your service. Think about this. Any way to limit your liability? Consider this. Yes, Maria.
I usually rely on the contract, whatever is on the contract, and you know.
Okay, so as a service business, you're better off, including myself. On the service agreement, very important, okay, we have one clause say, limit of scope. Okay, on your agreement, doesn't matter this is a product or service. You specify, on the contract, you specify what is the scope or what's the description of your product. So for example, my business is a service business, okay? I will have one scope is limit of scope. So like Maria is the kind of the party service or hospitality services. You need to limit the scope as narrow as or as specific as possible. Maria doesn't want to see, oh, I just provide the party service on certain day. No, you don't want to. You want to put on what kind of party service? It's a birthday party, 20 tables, and 200 customer, and where the location is, on what day and between what time. You want to specify as narrow as possible. If I represent my client, I would say I represent this client for this matter only for what transaction. Say for example, yesterday I have a client come in for the interview, and after interview I found out I may have 3 potential legal service for them. Say for example, number 1 is providing the lawyer certification to certify one money transfer is loan, is not income. So for the first kind of service I can provide is the money transfer from A to B according to the nature of the transfer. I certify this transfer is more like the loan. It's not like the gift. It's not a gift, right? So I will state why I classify this transfer or transaction is loan, is not gift. And you know the difference. If it is loan, there's no income, right? And as gift, there's no income, but maybe gift tax involved. So if I issue the different certification, it may come out with different tax consequence. So this is number 1. Number 2, I may need to set out the living trust for this family. And number 3, I may need to set out the transfer, the property transfer from the parents to the child. So after the interview, I have 3 different potential transactions to provide it. But we just stop there. They have not made a decision which one they want to retain me to do it. But if they come back next time, on my service agreement, I will specify I charge you this amount only for this. Even though during our conversation, during our consultation, we talk about so many potential services I can provide. However, when these people come back to retain me, I only perform this. Same thing like this. So if for people like you, especially if you provide your engineering consultation, you have know-how, then when you enter into the service agreement with your client, you want to limit this as narrow as possible. If it is for the product, of course, you have a description as narrow as possible, right? On the contrary, you want to have this item. So if this is a product, you want to specify this. Narrow is better. Okay, so yes, we can specify this on the service agreement. Any other mechanism we can use to protect our liability as vendor? Anything? As a business owner? What else you can think about that? To limit our liability. Yes, Maria.
Yes, we want to make sure that the client signs the contract and makes a copy, has a copy of
Okay.
everything.
Yes, we just go back to the issue of contract issue. Yes, assuming that's done. What else? There's one new topic we have not touched yet. There's one new topic we have not touched yet to protect our liability. Even though today we're talking about creditor, debtor, keep this in your mind. In real life, the positions switch all the time. Even though we are vendor, not necessarily we are always creditor.
Warranty.
Am I right? Am I right? Right. So when we talk about warranty, we may become the debtor. We may. But right now, my questions to you is, as a vendor, as a business owner, how can we protect our liability if we will switch to debtor position? Sometimes we don't want to. Sometimes we don't want to. Insurance, okay? The reason why I want to talk about this issue, because, there is one point I hope all of you can take away. Because our positions switch all the time. Not necessarily it is controlled by us. Sometimes it just switch, right? As a vendor, as an owner of the business, yes, sometimes we are in the position as a creditor, but sometimes it just change as a debtor. So insurance is very, very important mechanism to protect our business. So before I answer to Maria's questions, let's get the idea what kind of insurance we can carry.
We can probably consider getting a lawyer, just in case.
That's me, right? But lawyer is very expensive. Let's talk about before we hire a lawyer. It's good to hire a lawyer, but usually it's not easy, it's not cheap. Let's talk about the more economical way. Insurance. So let's focus on insurance right now. As a business owner, what kind of insurance we should consider?
Insurance liability.
Liability insurance. Okay, give me more detail. What kind of liability insurance we can consider to carry?
Worker comp.
Worker comp, that's by law. Okay, very good input. Okay, Andy, finally your talk. we are almost done for this semester, right? I like it. Finally. Yes, worker comp is by law, by the way. Okay, I really appreciate Andy. Okay, remind me. Worker comp is by law. Doesn't matter you like it or not. Okay, as long as you hire people. We will have, I believe this next session, okay, we will talk about employee. Okay. As long as your company hire people coming in, doesn't matter full-time or part-time, okay, and by law, you will carry the worker comp insurance to cover your employee, okay, in case any injury happen, any injury relate to the job. So worker comp, there's probably, I would say, number one, because it doesn't matter you like it or not. There's no option. You must carry it. Worker comp. What else? We're only limited to the liability. Okay. What else? Property, right? But how about the property you rented? You don't own it.
Still have to.
Yes. Even though you rent, even the property you rented from landlord, usually, I would say 100%, landlord will require tenant to carry liability insurance. It's called tenant liability insurance to cover any accident happen within the location. So there may be double insurance. One is carried by the landlord and the other is carried by the tenant. And more commonly practice is $2 million liability insurance. Some landlords say 1 million is enough, but usually right now and today it's very common to carry $2 million tenant liability insurance. And the premium is about $500 to $700 every year. So it's okay. It is okay. Right? It's affordable. Yes, Maria?
Isn't there a general or business liability that covers everything?
Yes, I'll talk about that. But right now, I only talk about the tenant property liability. Yeah, there's general. So yes, eventually I just want to ask. There is a general. Sometimes it's a umbrella policy. Umbrella. So think about this, okay? If you own multiple real estate property, and also your whole family own multiple automobile, you already carry multiple insurance already. For each house, for each vehicle, you already carry each individual liability insurance policy already. And usually your insurance agent will recommend you. Okay, I believe, I don't know your experience. Usually if you have 2 houses, you have 3 vehicles, you have 5 insurance already. You have 5 insurance policy already. Usually your insurance agent may recommend you to carry another additional umbrella insurance. And umbrella insurance is more general. So even though umbrella is on your personal, okay, it's not on the specific property, but that's general. So which means you have a multiple insurance policy to cover you. All right, so you may have a minimum automobile, right? Then you have your family umbrella insurance, and that's usually is $1 million usually. So if you don't have umbrella insurance, however you are thinking to run your business, seriously consider to carry umbrella. And again, this is about another $500, probably up to $1,000, depends on the insurance amount. So if you consider to run your own business, consider your family umbrella insurance. And for the tenant property liability insurance, that's required by landlord, so you cannot get away. And as Andy said, work account is required, so you cannot get away. So other than that, consider umbrella. All right, consider. Any other questions? So liability insurance, that's at least we need to consider it. All right. Other than property insurance, would you think about life insurance? It's very strange, okay? Why should we consider life insurance for business? Why? Usually we will not, and let me put this, okay? Usually, if you are running the small scale business, small time business, usually life insurance is not the issue there. Let me tell you why, okay? Because for life insurance, the premium is not deductible. For property insurance, for liability insurance, it is deductible to your business income. However, for any specific reason you want to carry life insurance, okay, and then the premium you pay for life insurance, usually, generally speaking, it is not deductible to your business income. Even it is not deductible, why should business owner consider to carry life insurance for business? Why?
I was thinking it is for the life of the business. Something happens with the business owner, it can carry on with the business. The business is still ongoing.
Okay. Very good, very good. Number one, let me tell you what. Okay. Number one, for business type life insurance, almost 100% is term. There is no whole life insurance for the business owner. You can purchase whole life, but this is on personal level. It's not for the business. So for life insurance, there are 2 different life insurance. It's term life or whole life, right? Universal whole life. We only talk about term life. That means every year. So there is no cash value. For term life insurance, only for protection of the life, right? So as Maria just mentioned, the reason why the business may consider to carry life insurance because this type business is more like a personal business. It's more like personal business. Okay, even though for Apple computer, it's high-tech company, I bet Apple company, they carry life insurance for Steve Jobs, for sure, because this person is so important for the business. If any accident happen to this person, it will somehow affect the business. Then you consider. And also, if business is liable to anybody else, remember, I just told you, right? The creditor, debtor, we switch position all the way. So at one point we are creditor, at another point we become the debtor. So another consideration is, for example, the lease agreement. If it is a long lease agreement and any accident happen to the owner who run the business, even that person pass away, lease agreement is still there. So that is another reason why you need to carry sufficient life insurance to cover business liability. And lease is one example. You got it? So not necessary to carry life insurance, but in order to fulfill or to protect business liability. So life insurance cover specific business owner, probably. So life insurance, maybe you should consider that for your proprietary, okay, especially for proprietary business or for small partnership business. So life insurance, that is another thing. At least you should consider it. All right. And next time or 2 weeks from today, we will talk about employer-employee. So I will leave the issue there, because there is another big issue, the creditor-debtor issue. And usually employee is protected by law. So even the company filed bankruptcy, the salary still need to be paid. I missed one point. Okay, even filed bankruptcy, even the business filed bankruptcy, certain debt cannot be discharged. So tax cannot be discharged. Salary cannot be discharged. Okay. So those two major things. Number 3, bodily injury cannot be discharged. Say for example, Mr. A hit Mr. B, and there's a judgment against Mr. A, say you need to pay, say, $200,000 to cover Mr. B's injury, and Mr. A cannot file bankruptcy to discharge this injury debt. Okay. And number 4, fraudulent debt, fraud debt cannot be discharged. So just like the example I mentioned to you, if Mr. A defrauded Mr. B and took away certain amount, the money from Mr. B, and Mr. B filed a lawsuit and finally Mr. B won the case, again, it's a, say for example, this is a $200,000 case, and the Mr. A cannot pay back, but the judgment is still good, right? And the Mr. A cannot file Chapter 7 or Chapter 13 to discharge fraudulent debt. So fraud debt is another example, cannot be discharged through bankruptcy.
You said how many body?
Oh, a lot. I only give you 4. Okay. A lot. I only give you 4. Okay. Number 1 is tax. The money owed to the government cannot be discharged. Okay. Number 2, the money owed to the employee, salary, wage salary, cannot be discharged. Number 3, that is body injury. bodily injury, debt cannot be discharged. Number 4, fraudulent. The debt incurred from fraud cannot be discharged. Any other questions so far? Go back to our example, okay, to the beginning, okay. That is your homework, okay. Let's give you a little bit idea, give you a little bit hope, okay. So we can close for the day. So we have a whole loop, okay. So you are A company, you are running A company. You ship one merchandise to B company, and on the due day, the payment did not come, or the check bounced. So we know it's bad debt. But luckily, you all file financing statement. Okay, this is the situation. So at least luckily you file financing statement, assuming. Okay, I'll give you the variation. So at this moment, how should you do? You file financing statement. Okay? So that's the whole purpose is. You file financing statement. Then that's your homework for next week. Some of you turned in already. I really appreciate it. But due date is next Sunday, okay? Not tomorrow, but next Sunday, 6 p.m. So again, come back to our situation, okay? So we have the loop closed for today. So you are the owner of company A, you ship the merchandise to B, on the due date payment did not come in, but luckily you filed a financing statement. So how should you do?
You collect whatever you send, right?
You collect whenever, more specifically.
You can collect what you sell, right?
Yes.
You have the lien on that.
Right. So legally, what can you do? You are right, but I just want to be more specifically. Payment did not come in. You have a financing statement on your hand and property file with the state. So payment did not come in. How can you do?
Can
How
you go
can
to sheriff? And then
Smoke.
complete it? You can you complete your sentence?
Execute that.
Okay.
I have to
Yeah.
go pay judgment first. File a court and pay judgment.
You don't have to. Okay. The answer is you don't need to file the judgment because that's the whole purpose of financing statement. If you file the judgment, that means you don't have anything. That's the hassle we just mentioned. You don't want to get involved such hassle, right? Because we spend an hour almost talk about hassle, right? So the whole purpose or one part of purpose to get the financing statement is you don't want to get a judgment. You go around the judgment. So once you have financing statement, you don't have to go to the court. Okay? You just present your financing statement with the authority, even though we don't get involved in the process. But however, don't worry about that. You don't go through the court. You go through, I need to do the research. You can do the research also. Okay? I believe you go through the sheriff office or go through certain government agency. Then you present your financing statement, you get your merchandise back.
Take the